Welcome to another episode. My name's Jose Najarro, and today we're actually going to talk about my favorite sector, and that's the semiconductor sector. We're going to do a quick update, and I'm going to talk about the four top dogs in the semiconductor sector. That's AMD, NVDA, Micron Technology, and Intel Corporation. So let's get started. All the information that I've taken from either comes from seekingalpha.com, investors website, or different news article, so feel free to check them out. Before we begin, don't forget to hit that subscribe button, subscribe to the channel, give me a thumbs up. I post about 4 to 5 videos a week. I'm also streaming on Twitch and Mixer Monday and Wednesdays at 9 p.m. Eastern Time. Feel free to come in. I'd like to talk about Star Wars stocks or games, so just pass by and have a good time. All the information should be in the bottom here. And if you guys are listening to the podcast, Jose Najarro Stocks in Twitch or Mixer. And also don't forget to check out my previous videos. I did an update on cruise lines and airlines. And actually I just did a Luckin Coffee fraud video, so definitely check that one out too. All right, so next let's take a look at stock performance. The first one we're going to take a look at is Micron Technology, and we're all going to compare them to the same date of February 19th. So Micron Technology compared now to February 19th is down 31.2%, and it's actually the biggest drop out of them all. And they're the only ones that have actually reported earnings. They reported earnings on March 25th, and I'm actually pretty happy that they reported earnings because they have given us some insight of what to expect for this sector. Next, we have AMD. AMD is the second biggest drop. It's down 27.69% compared to February 19th's high, and right now sitting at about $42. They do report May 5th their earnings, so we still got about a month away before they report earnings. Next, we have NVIDIA. NVIDIA is down 22.49%, less than AMD and less than Micron. They report earnings on May 21st. So again, this one even has a month and some change before we see earnings from here. But right now, it's about $70 from its all-time highs in February 19th. So we can see this semiconductor has taken a hit. And the final one is Intel Corporation. Intel Corporation is the one with the lowest drop, sitting right now at 19.34% drop. Not that big compared to when we take a look at Micron's with 33%. But we all know Intel Corporation is the biggest company out of all these four. They're probably the ones with the biggest cash balance sheet. They're probably the strongest one in regards to balance sheet compared to all the other ones. And that's why investors here would deem this a little less risky. And that's why we only see less than 20% drop. Intel Corporation earnings are actually coming up in this month, March 23rd. March is when earnings are coming up, not this week, but next week. We're going to start seeing a big inflow of earnings, and I'm actually excited to see how things are going. All right, so next I mentioned that Micron Technology has reported earnings. And I'm actually pretty happy that they reported earnings because, like I said, they're giving us pretty strong insight of what the world is going. So their earnings, just for you guys, I did do a video on them, so definitely feel free to check out that video. I might post it on the links here if you guys want to check it out. But their earnings took place only a month. Only 1 month of their earnings was truly affected by the coronavirus, and it was the month when China was closed down. The rest of the world at that moment still had not really been affected by the virus, but at least that 1 month has given us insight of what to expect. So they did mention that this virus was a significant impact in China's economic growth for the first calendar quarter. They saw a huge decline in smartphones and automobiles. So again, that's something to note, a huge decline in smartphone and automobiles. But this decline in that was offset by stronger data center demand due to increase in gaming, e-commerce, and remote work activity. I'm actually pretty happy to see this thing. So these four things: strong data centers, gaming, e-commerce, and remote activities. AMD, Intel Corporation, and NVIDIA are all pretty much in all these sectors. In the data center world, we have AMD and Intel using their server CPUs. We have NVIDIA and AMD using their server GPUs. Then we're talking about gaming. In gaming, every machine needs a strong GPU and a strong CPU. Again, coming both from all Intel, AMD, and NVIDIA. For remote work activity, it means you need to have a nice laptop to be able to do your work. Who are these laptops powered by? They're powered by AMD, they're powered by NVIDIA, or they're powered by Intel Corporation. And in the e-commerce world, has that strong data center, which again flows back to those three companies. So I think these companies are in a great place during this market. Right, this market might be a bear market for some, but it might be a bull market for others. We're seeing a very strong decline in the cruise line, the airlines, and any travel, but it does seem like the data center, the cloud world is where things should be moving. So remember, this company reported for earnings that was only affected by 1 month of the virus in China, but they reported in March 23rd. So most of the world had already started to take shape with the coronavirus and how they were working. So Micron Technology is actually a pretty good resource to see what they saw. And they said that this trend is continuing, what they saw in China. So all around the world, they're seeing huge demand in data center demand, and all regions look strong, and it's leading to supply shortage. And this, to me, they're saying they're leading to supply shortage. It kind of worries me about one thing. Micron Technology, I think 2 years ago, they were doing really good. But it was just because companies just wanted to keep buying their inventory. Eventually, they had too much inventory that it led to about a year of Micron Technology slowing down in sales because their customers did not need to. They did not need any more items. They overstocked, and I'm hoping this is not what's gonna happen, right? If all these companies are buying all these CPUs, all their GPUs, all these memories, is it gonna lead to us? Right now, they might be overbuying, so in the upcoming quarters, would it lead to a slowdown? And that's just, again, something to keep in mind of. They are seeing an increase in demand for notebooks. So notebooks, again, are used for everything, working from home, for education purposes. Right now, we have schools. All the schools are out, and your kids are pretty much just working from their laptops as well. And again, all those companies, all these 4 companies are in this sector. They all need some part of their components are in that notebook that you have. And finally, they say that they see encouragement they're seeing manufacturing in China increase back to full production. So that to me tells me, hey, once this thing goes away, hopefully it goes away soon, everything is just going to come back to normal. Everything's going to return back. But they did mention that they see China smartphones manufacturing volumes recover. But then they also mentioned that they expect the overall demand for smartphones, consumer electronics, and automobiles will be below their expectations for the remaining half of their fiscal year of 2020. So that's pretty much for the next 2 quarters. So I think it's up to fall. So what that tells me, 2 things. I don't want to invest in a company that does smartphones and consumer electronics. And I can think of one company. I can actually think of 2 companies. The first one I'm thinking is Apple. Apple makes over 50% of their revenues from smartphones, and they're actually looking for a huge growth in China. So this is something to keep in mind of if you are an Apple investor. Again, this is only going to probably be a 1-year thing. Once everything starts going back to normal, they are going to see smartphones go up. But it's something to keep in mind of. And if you, I'm personally, I think that it might affect the short term and might give me a better buying opportunity later on. Again, with consumer electronics, right? They have their iPads, they have their iWatch, they have all these electronic devices that it seems people are not really buying. Another company that throws me is Best Buy. Best Buy is one of the biggest companies known to sell, one of the biggest retailers known to sell smartphones and consumer electronics. Yes, they sell laptops, but how many laptops are people actually buying? And automobiles, I actually don't follow many automobile companies, so I'm not too worried about that one. All right, now I move to this side, guys. So like that, you can see. Next, let's actually talk about revenue growth. And there is actually a growth for most of these companies. I'm taking this information from Simply Wall Street, which is a pretty nice application that I use. They have plenty of analysts there updating there on almost on a daily basis, on a weekly basis. And these guys only have one job. So usually these numbers that I follow here are pretty are kind of accurate, and it gives me a good trend to see how these companies are doing. So first, let's talk about AMD. AMD for the 2019 made $6.73 billion. For 2020, they're expecting to make $8.6 billion. That's a growth of 27%. A very strong growth there. Next, we have NVIDIA. NVIDIA, they made $10.92 billion in revenue in 2019. I honestly thought AMD was a lot further away from NVIDIA, but they're actually pretty close. NVIDIA doesn't make that much more than AMD. But let's go back to NVIDIA. So 2019, they made $10.92 billion. For 2020, they're expected to make $13 billion. That's a growth of 19%. Next, we have Intel Corporation. This is definitely the top dog in this industry. They made $71.97 billion in 2019. Again, unfortunately, coming with a big company, it's usually pretty hard to grow. For 2020, they're only expected to make $72.47 billion, and that's a growth of less than 1%. Next, we have Micron Technology, and this might be the reason Micron might be the biggest drop. Remember, Micron had 33% drop. Micron for 2019 made $23.41 billion. For 2020, they're expecting to make $20.12 billion, which is actually a decline by 14% in revenue. But we can see, again, AMD and NVIDIA, strong growth. Intel Corporation, a very big company, and still seeing some form of growth. Unfortunately, it's less than 1%, and Micron Technology is actually going to see a decline in this upcoming year. Next, let's take a look at the semi earnings per share. So this information here comes from SeekingAlpha.com, and I enjoy using Seeking Alpha to get this information. So AMD's for 2020, they're expected to make $1.01. The only one I really care about is 2021. I like to look at forward PE ratio 2 years from now, right? A lot of people look at PE ratio from now, but I really want to see where the growth of this company is going. So I like to look at forward PE ratio instead. For 2021, this company is expected to make $1.57. Giving this a forward PE ratio of 27.21. It's crazy, right? I remember AMD when it did not make any money and it did not have a PE ratio. I also remember when they had almost the 80 PE ratio, and a forward PE ratio of 27.21 is actually pretty close to the normal around 25, which is what we see most companies at. Next, we have NVIDIA for 2021. They're expected to make $9.10 per share, which gives this a company a PE ratio of 26.79. Again, it's pretty much priced the same as AMD. Next, we have Intel Corporation. Intel Corporation is expected to make $4.07 per share for 2021, giving this a forward PE ratio of 11.53. Finally, we have Micron Technology. For 2021, they're expected to make $4.90, which gives this a company forward PE ratio of 8.41. So this tells me a few things. One, we saw AMD and NVIDIA are the ones that are growing the biggest, right? If we take a look at their previous revenue growth, both of them are doing strong double digits. And investors actually see that, and that's why investors are willing to pay a higher PE ratio. We see almost 25 for both AMD and NVIDIA. Next, we see Intel Corporation being a top dog and still growing by less than 1%. We can see their forward PE ratio actually be pretty low compared to these other companies. There's not much growth there, so investors feel safer and giving it a less forward PE ratio at 11.53. Micron Technology, though, Micron Technology is a crazy one. This company is actually very cyclical, and sometimes their forward PE ratio is pretty high, some other times it's pretty low. For 2021, they are expecting an 8.41, which makes this pretty cheap. I actually like Micron Technology, and at any price below $44, I personally like the company. All right, I moved to this side again so you guys can see. Now let's talk about my thoughts. First, we learned a lot from Micron's earnings. First, we know that the working from home, the cloud sector, the e-commerce sector, the gaming sector, they're all doing pretty well even through this whole craziness. They're seeing an increased demand in all items like laptops, memory, servers, CPUs, and GPUs. They are seeing a decrease in demand of smartphones and automobile tech. So again, if you guys know of any of these companies that are doing bad, I might wait a bit right now and maybe see if they take a bigger hit before jumping in any of these companies. For me, the prices are still not that cheap for AMD or NVIDIA, They still have over a 25 PE ratio. I personally think a 25 PE ratio is not pretty good. That would give me enough to enter in the position. Anything below that I think would be pretty cheap. Anything above that I think might be a little too expensive for my taste. So for me, I do think that I might increase my position in AMD and NVIDIA a bit, very small position here. I don't think I'm gonna go very big on any of them right now, except Micron. And if I wanted to get involved in the semiconductor, but not, I wouldn't know which company to pick, there is always the semiconductor ETFs, SOXX, and that pretty much has all these companies. So yeah, I hope you guys enjoyed this video. Let me know what you guys think, post in the comments, and don't forget to hit that subscribe button. Good night and see you next time.